What's going on, everybody? It's your boy C-Zar, and we are talking about Bitcoin today. It is the 4th day of November, and here we are at about $104,000 with 11 hours and 16 minutes left in the day. You guys hit that like button. Let's get into it. All right, here we are in this megaphone pattern. And I just want to say I'm not happy about what I'm seeing here because typically what you get is 5 moves, right? You'll get 1, 2, 3, 4, 5, and then you choose, are you going to break out to the upside or are you going to break out to the downside? Then you make a decision, right? And typically this decision can be reinforced with what's called a partial decline, where you reach for the lower trend line, but you can't quite get there. It's actually a very bullish thing and allows you to grow and hit the upside and break out to the upside. However, we've done something that's not good. We've found our partial decline, and now we've come back to this zone. It's not a deal breaker, but it is concerning. It is certainly concerning because this type of behavior is more commonly associated with a megaphone pattern that breaks out to the downside. That doesn't mean that it has to break out to the downside, but it is more commonly in the time that I've seen these megaphones happen. When you get a partial decline and you go one direction but then come back, these are the times when you do break out to the downside. The ones that you break out to the upside, you don't come back. Maybe you come back a little bit here or there, but you don't come back to the low. Okay, so statistically speaking, the odds for us to go lower just went higher, right? That doesn't mean that they are through the roof. That doesn't mean that that's the likelihood, but I'm just saying right now it's something we should be aware of. So what we want to see is one of two things. Either one, we want, if we want the bull market to be alive and well, and we don't believe that this is the all-time high and that we have more to go this cycle, unless you're a bear, you would want that we get a double bottom here, we bounce right off this level, and we don't return. And not only that, but at the pace of which we don't return, at the pace of which we get out of here, it needs to be at a faster velocity than what we saw here. And it could be. It could be. Perhaps what we have here is the setup for a W pattern, which would be great. And typically this leg of the W is faster than this leg is. That was a pretty fast move down. So to have a move that's up that's even faster than that would be quite the miraculous recovery. But that would need to happen. We need a double bottom to avoid the statistical probability of going lower. Or, number two, we can go slightly lower, oh so slightly lower, and we get a fake out where we're breaking out to the downside, right? We get a slightly lower low, we get a fake out, something like this. But again, the reaction that needs to happen is dramatic. We need a dramatic recovery if we do get some kind of fake out. It needs to be a true fake out in all aspects of the word, right? A fake out is like this, where you break out, you think you're breaking out at least. We didn't know we were in a megaphone pattern. We thought we were breaking out of these highs and then reversed immediately, right? That's a fake out. That's a proper fake out, because a fake out isn't just getting up here and then coming back down. It's at the rate of which you come back down, or in this case, going down and then coming back up. The rate at which you come back up should be rather stupendous. It should be good. It should be fast, faster than anything to the upside that we've seen in a long time. Anyways, those are the two requirements that we need, right? So essentially, find support now, or if you go lower, you better find some immaculate support. It better be a fake out. Anyways, let's look at the 1 hour time frame. We'll zoom out from there. We'll see what the charts are telling us as far as what direction we're going to go. I can't imagine that Bitcoin's in a bear market now, and you get coins like Dash and Zcash pumping, because these coins just broke out. They've got more growth to go. So what, the rest of the market's going to go into a bear market? Look at this. Onyx coin is up today while the rest is down. Isn't that funny? But Onyx coin's also at some of the lowest prices it's been all year. So that's, it's just funny that happens. Man, everything is red. Everything is in trouble. I'm actually kind of curious. What's the fear and greed index saying right now? Oh, man. Yes. Yes, now we're getting somewhere, you guys. A 27. 27. If we could get into extreme fear, that would be awesome. That would be incredible. Something below a 20. We might do that. If we close here today or lower, we might do that. The liquidation levels, if we're looking at this over the past 30 days, they are predominantly short-sided, right? Long-sided, not so much, right? 3 billion in longs. We have 16.6 billion in shorts. That's crazy, right? I mean, in that perspective, what is this? Let's see. 3.2 billion versus 16.6. What would that be? That's more than a 4 to 1. Would it be 5? It basically, yeah, I think it would be a 5 to 1 ratio. Effectively, the shorts outweigh the longs 5-1 over the last 30 days. Now, the thing is, we can still move lower. Just because the shorts, and this is where people get in trouble whenever they use this tool, they think that because the shorts outweigh the longs that we have to move higher, but the shorts have outweighed the longs, guys, since this low here, and we've still moved lower. As long as there's longs that keep longing, we're going to keep going down, right? And there is about $1.4 billion in longs. That's a lot of money. $1.4 billion in longs to get liquidated right below $103,000, let alone at $103,000 itself, which is just $1,000 away. There's a whole billion right there to liquidate as well. We get rid of 1 or 1.5 billion out of the 3.2 billion in the longs that are left. Those will probably transfer into shorts. We'll pile on the shorts more. I think we're setting ourselves up for a massive short squeeze. And here's the deal, guys. Here's the best part. Okay, so before we really get into the short-term stuff, and because we're going over this because I really do think that we have higher to go. I don't think we're going to break out to the downside, but we'll see if we can verify that in the charts as well. The beautiful thing about this is if we do have a short squeeze, if we are moving up higher and clearing out some of these positions, the area that we're going to go to is the hot zone, right, where there's most volume. So there's not a lot of volume here. There's not a lot of volume here. Most of the volume starts here to here. There's this kind of area between about 116 to $120,000. So likely we would see a rapid, massive recovery all the way up to something in this area here, which is just above this high. And going back to the megaphone pattern, just like getting below this low would be very detrimental unless you get a fake out kind of recovery, right? Very detrimental unless we get a fake out recovery. Breaking above this high would be very awesome because that just the statistical probability that not only are we going above this high, but that we're breaking out of this overall pattern goes up tremendously as well. It goes up tremendously. So getting above, again, let me just say that in less words. Getting above here is very good. 116K is the high there, and the liquidation level is the hot zone here where there's a ton of volume starts at that level. It starts at that level of 116K. So we're probably going to go through there when the short squeeze kicks into effect. And again, typically, I say typically, maybe there's a better word for it, I don't know, but typically throughout this range, we have found the maximum amount of shorts at all these levels. I don't remember what it was here. I want to say it was 20 billion here, but I can't remember. But each one of these levels, there's been $20 billion in shorts. And guess what? Each one of these tops, there's been $20 billion in longs. We are almost at $20 billion here with shorts. We don't need $20 billion. In fact, something else, another observation we've made is that there is such a lack in leveraged positions overall right now compared to anything else throughout this range. That's really good. I was actually talking about this yesterday. I think that a lack in leveraged positions actually means that we are more likely to move higher. When you have an abundance of leveraged positions, like we did back here, you have to shake the markets out. And slowly but surely, we whittled out all those leveraged positions in the markets. Where did they go? They got reamed. They went to the exchanges. CZ, Brian Armstrong, they own it now, right? And they're not leverage trading it. They're cold storing their cryptos is what they're doing. Anyways, 104K right now. The assumption is if we go lower, it'll be a fake out breakout. Let's see if we can validate that. Okay, let's look at the 1 hour time frame here and zoom in. 1 hour time frame, zooming way the hell in here. A lot of volume on the index. Let's look at it on Coinbase. I trust Coinbase's volume and Binance. By the way, it doesn't really matter. You know, I've gotten into these arguments with friends, and some people think it matters, but I think if you're using Coinbase or Binance, who else? Probably just those two because they're the two biggest crypto exchanges. Volume is more or less going to be accurate. Okay, Kraken, KuCoin, you know those ones as well. But I would say Coinbase and Binance are probably the best for using volume. Anyways, you are definitely picking up some volume as you're dropping. Absolutely you are. Some of your largest spikes are happening as you're dropping. However, we are decaying in volume, which is kind of nice to see that the volume is decaying slowly. We're probably going to go lower, but continue to taper off in volume. So then that fake out breakout is really going to have to come into play. Let's see, the 1 hour time. I keep saying fake out breakout. It's just a fake out. It is a breakout, but it's a fake out. You don't need to say fake out breakout. It's redundant. Anyways, we do have bullish divergence. Low, higher, low, higher, low, higher, low. That is 1, 2. That's triple bullish divergence right there with these lower lows. That divergence starts all the way back here at about 107K. it's only valid as long as we don't take out these lows. If we close a 1 hour time frame below this low, we no longer have triple bullish divergence. At that point, we're forming quadruple bullish divergence, and there's no such thing as that. So, or at least that doesn't really work out so well. Typically, whenever you start getting past triple bullish divergence, it's really just slow bleeding down. All the meanwhile, your RSI is coming up, and you think that you're getting bullish divergence, but really, it's not. It's not that. You're just cooling off to the bearish effect. I don't know. I don't know how else to explain it. It's like you think you're forming bullish divergence, but really what you're getting is higher highs in the RSI, but lower lows, or lower highs in the price. It's hidden bearish divergence, actually. Stochastics look bearish. The MACD looks bearish. It's really hard to be bullish right here other than this bullish divergence that we're seeing here. Other than that, it's really hard to be bullish right here. I got to admit. I would just stick with this basic thought that as long as a 1 hour time frame does not close below about 103.7K, and this is on Coinbase, on Binance or Kraken, it might be a different price, but 103.7K, as long as you're not closing a 1 hour time frame below there, we're good. We're probably going to go up to about $107,000 or higher. But if not, if we close below there, just understand we are making a slow, methodical movement down. Hopefully we actually make a quick stab down with a quick recovery for this fake out move. And then also understand, even if we do find support here, if we do go up to 107K, we're not saved, okay? We could just be finding resistance at prior support and then still working our way lower, okay? We just get rid of that divergence and then we move lower. So don't get too excited. In fact, let's talk about what move you need to see to get excited to the upside. First and foremost, again, getting above 116K, very vital. On Coinbase, it's 116.4. On the index, it's 116K, whatever. What's a few $100s between friends, right? That is the most crucial point. But the point at which I would start to get excited that the low is in itself, I mean, that would validate it. But I like to be a little, what's the word, preemptive, right? I would start to get excited when we're above 108.2K. We could move up there and still move down. I'm going to say this level here. I'm going to say this level, yeah. Because that's the golden ratio, and that is a relevant high right there. I would say $111.3 yeah. $111.3 when we get a 4 hour time frame or higher time frame to close above there, then I personally will get excited that the low is in. That doesn't mean the low is in, but if we start closing prices above here at 111.3K, I would get excited. We get above here, that does mean the low is in, okay? I'm excited here, the low is in, confirmed, once we're up here at 116.4K, okay? Until then, I'm not excited. Any movement up is not amusing at all, and it's probably just going to lead us to lower prices, is what I'm seeing here. Until the charts suggest otherwise, right? We're looking at the 4 hour time frame now. The RSI on the 4 hour time frame does have bullish divergence. We do have double bullish divergence at the moment where there's a low, a lower low, and a lower low. However, this double bullish divergence can still continue to form. We can absolutely keep coming down a little bit more. And even with this, we've got 3 hours and 3 minutes left. What if over the next 2 hours we dip down, but then that last hour we come back up and close here? We can absolutely drop and finish off with a wick. It's like the RSI down here closed right at the oversold zone, but at the base of this wick it was probably lower. You know what I mean? And then you come back up and the RSI closed there. Anyways, the 4 hour time frame is showing signs of readiness. The 4 hours making me excited that we really don't have much lower to go. And the reality of the matter is, looking at the 1 hour and how bearish it looks, if we don't make a move down right now, it's probably not going to happen. If we don't make a move down right now, it's probably not going to happen. Which, again, going back to this thought here, that I wouldn't get excited until we're above, where is it? Come on. How far back did we go? Man, I wouldn't be getting excited personally until we are above this price here at 111.3K. But if we do move up here, I would say, again, you're kind of in a make it or break it moment for the downside. It's like if you're going to do it, you have to do it now. Because if not, you've got this 4 hour divergence that's likely going to take you not just above 106K, but probably even above 107K. That doesn't mean that you can't move lower. I don't know. I would just be excited. I'd be very excited with that because this is a nice looking kind of bottom for the RSI. It would make me think that we would be trending higher if we move up from here at all. The stochastics are bearish. The MACD is bearish, building momentum. Maybe I got to let that go. Maybe I just got to get over that. I'm going to stick with it. We could move up from here, but still move down. Don't get excited until we're above 111.3K. I won't personally be excited until then, okay? Daily time frame. Zooming out a little bit more now, looking at these indicators, the daily RSI is right at the same area that every single time since March of this year it has prevailed. It has upheld us. It's held us up. Is it going to do the same here? I don't know. You know, we've done this. We've bounced in this area, came up right around the 60, just above the 60, and then down, and then boom. Then that's when we got overbought. Here we were. We got to this area, boom, we got overbought. Here, we got here, just above the 60, came back down, and then boom, that's whenever we got overbought. Are we doing the same thing here where we go right up to the 60, we're coming back down, and then this next move will be when we get overbought in itself? I don't know. Right? We've seen this happen once, twice before. One time we did just go right up to the overbought zone. I'm wondering if we'll get that here. Are we going to get that second bounce, or are we going to get into the oversold zone for the first time since February of this year, back during the really, I think some of the higher times of the fear and greed, wasn't it? Let's see. No, that was back in March, April. Interesting. Let's see. If it does happen, that'll be some of the lowest readings on the RSI that we've seen all year. Absolutely. And whenever we were here last time, we weren't at the low specifically, but we were in our low area, so that would be encouraging. However, what I'm not looking for, and who cares what I'm looking for, but what I'm not looking for is a range in which we consolidate for multiple months before we move up higher. I don't want to see us consolidate here for multiple months before we move higher. I don't want to see that happen. I just want to see us V-shaped recovery out of here. V-shaped recovery out of here. And don't we always want to see a V-shaped recovery on every single low that we have? But I'm more saying that because it's my expectation, not just because it's what I want to see. Stochastics are bearish, but you're right at an area to bounce. MACD is bearish. You have bullish divergence to some degree. I'm stuck between a rock and a hard place here because I want to call for lower prices. I do. I just don't know. I'm not confident in how low you're going to go. I want to take, should we take this low to this high? Would that be more of a better representation, or would it be better to take this low? You're respecting this golden ratio zone. You're not really respecting that golden ratio zone. Okay, let's take this one. You're right at the 1272 for a double bottom. If you do go lower, 102K, 98.9K are both targets that we should accept as possibilities. Does that break us out of our megaphone pattern from a low here connecting the dots? It does not. So on the bright side, we can reach down for this level, even below 100K, and then come back up with a vengeance. But the trick there, again, we have to get above 116.4K. 116K on most charts, 116.4 on Coinbase. If we are to go lower, 99K to 102K is the perceived outcome, okay? Somewhere in that range. And there are a ton of longs to liquidate between here and there. Let's imagine we did go to $99,000. We would liquidate $2.6 billion out of $3.2 billion in long positions. And we'd probably pile on the shorts as well. And then we're below 100K. People capitulate just based off of that psychological endeavor there. Really, we're finding support at the golden ratio, finding support at the exact same low that we had before over here. Before we went on this massive run all the way up to about $123,000. I wouldn't be surprised if we did see a move like this, if we recovered at a faster pace than what we saw here. Because we are inside this megaphone pattern, and it's a very volatile pattern. Curious to see. Curious to see, my friends. If you're wondering in this video, if you're like, are we going down or are we going up? You haven't really told us what direction you think we're going. I do think we're going lower, just a little bit lower than this low here. But I wouldn't be surprised if we had a double bottom. I really, if we bounce from here, cool, whatever. Don't get excited for a double bottom until we're above 111.3K. At that point, then it gets somewhat exciting. Then it seems like it's the real deal. It is the real deal for sure once you get above this high. Until then, I guess I'm calling for anything from about 103,000 itself, which is $800 away from here, to $99,000, somewhere in that range there. I got nothing else. Hit the like button, subscribe. Thank you all for being here. I'll see you on the next one. Okay, take care of yourselves. Bye-bye.